What's going on, everybody? Give me a 1 in the chat if you can hear me okay, and if the quality is good. I changed some settings on the OBS software, so it should be 1440p, 60 FPS, super crisp. If you have 1440p as an option, let me know too. I'm trying to make sure I have that. Should be super crisp. So just making sure I got that. Okay, perfect. Yeah, I tweaked some settings. I kind of noticed after a couple lives that my settings and my streams weren't as clear, so I did some bitrate editing and watched some tutorials. I'm not some super streamer, so I do have to look those things up. But today I wanted to cover, and this will be recorded, by the way, so if you guys need to go back and rewatch, you can pause, rewatch, things like that. Yeah, rap to the beat. But today I wanted to cover today's price action, not really focus on the morning, although I did tweet before market open, right when I sat down, that it looked like we were in for a bit of a seek and destroy, obviously before FOMC, and that's basically what we got. You know, nothing too exciting in here. You might have been able to go on the 1 minute, find something, but no real range compared to this, right? So I wanted to go over the morning, how I knew it was gonna be choppy, and then the trade that I took in the afternoon into close. So, and then we'll go over some questions you guys have. I can cover some things in the end. And I'm trying not to keep this super long. I know most of my lives have been like 1:45, so I'm trying to keep this one about an hour. If we can do that, we'll, if we run over, who cares? I mean, as long as we're answering questions. But let's start off by how I knew today was gonna be choppy, right? So 15-minute time frame. I have this gap down here, even though we opened up about, I usually get to the desk around like 8:30, so let's just put right here. So this is what I see in the morning, right? And so I mark out midnight open, and we don't know where. I guess we can go to like 8:30. How about that? We'll just go forward a couple bars to 8:30. So there's 8:30 open right there, right? So this is what I see, and obviously I have my my screen set like this. So I'm on the daily, I'm on the hourly, 15-minute, 5-minute, and so this is usually 15-minute. But I'll sit down on a big screen in the morning and look, and so I have this little neat indicator here that shows you Asia session, London session, and then New York in purple, right? So I kind of just pop this on in the morning to see what we've done. And so you can see we've taken out the high when I sit down at the desk, and we've taken out the low of Asia, right? So what does this look like off the rip? Well, it looks like we have this broadening formation here, right? So what is it doing? It's expanding the range. And so that's the seek and destroy model, right? So it's taking out liquidity, reversing, going to the next, right? So take out lows, take out the highs. And so that is not something you want to see if you're expecting a trend day or anything like that. This is a good hint after we've taken Asia high and low, because Asia is accumulation, right? And usually in London, you have some manipulation down here. And so if you trade London, you could be, buying down here, maybe on like a fair value gap, right? Or in discount. So I'm a London trader, so I sit down and this is what I see. So I know today's FOMC. We're probably going to get a seek and destroy or some chop before, no real movement until the news release. So that's already going through my head. And the fact that we take these highs and lows, that's another sign. So I'm ultra cautious in the morning. Settings for DR/IDR default. This isn't DR/IDR. I do have the indicator on here. I don't really use it that much. I used to kind of glance at it when I was, seeing how they compared, but really, honestly, DR/IDR opening range is just an ICT concept that you can go and watch ICT videos. It's the same thing, right? And so I try and just stick with one strategy, and ICT for me, that is the best in my opinion. So anyways, you have this broadening formation, right? And so we're before FOMC. And so I'm basically just sitting on hands, tape reading, you know, wanting to see what price is going to do. So let's go back to real time. Get out of this. Cut this off. And if you're curious about this indicator, the boxes, right? Like here's a good example, right? You see big range day or big range in Asia, and then we take the lows, right? So this is not really accumulation, but I guess you could call all this accumulation. Take the lows down here, take it one more time in London, and then there's your distribution back up, taking Asia high in New York right here. So this indicator is called Futures Exchange Sessions 3.0 right here by Infinity Trading. And my settings are here. I got these settings from T-Trades from one of his streams. They're a little bit edited just to show, you know, the continuity between each little session. So if you want, you can screenshot this, pause it, do whatever. I'll leave it here for a sec. So just pause the video if you missed that. I want to kind of get these quick. So I'm usually on the 5 minute. I like to trade the 1 minute, and you could have caught some nice little trades up here into liquidity, right? But let's go over on the 5 minute now. So this is what I was watching. So sit down at 8:30. Let's mark that out right here. Bold. So 8:30 right here. And you can see we've taken these highs, right? But these are, I guess you can call it this as well. But these are pretty clean, right? Lily grabbed it by a tick. So we've cleared this out, but we still have these relative equal highs, okay, before 8:30. And obviously it looks like hindsight, but in real time, this is what I was thinking. So I wasn't really interested in all this, right? Because 9:30 opens up, it's just chop, 5 minute chop. And you don't want to sit, right? So if you go on the 1 minute, you know, you're seeing back and forth, back and forth, back and forth around 9:30, which is right here. Okay. So 9:30 opens up. You basically are just getting chopped around. And so maybe on a 1 minute, you're seeing these as shifts and buys, and you're getting wicked out down here, or you're trying to buy this fair value gap here after a shift, or you're trying to go short, whatever it is. But you don't want to sit and study price, right? This is what you see in the 5 minute. Okay. You don't want to sit and study price on your entry time frame. You want to basically be zoomed out, right, on a higher time frame. So I have the 1 hour, 15, and the 5, and this is like my precision layout. Obviously, I'm switching between the daily up here, and I can go back and forth. But this is mainly what I look at during the day. And so I'm sitting here, and all I see is, we hit this order block right here on the 1 hour. So that's supporting price right here. And we have these equal highs right here. And so when 9:30 hits, you can see what happens. We come down, take out this low. I'm going to clear these off now so you can see. So 9:30 takes out the low. And do we displace past that low? No, we come right back into the range of this candle here. And so there's no fair value gaps. That's not something you want to see if you want to see a displacement down in a fair value gap form to go short. This just looks like a liquidity grab to me, no displacement. And so higher time frame order flow up until this point is what you see. Hit this order block, head higher, take out this high. And so now you see price wants to come back down, right? And if you go onto this 1 hour fair value gap here, you can see how price has been supported with that 1 hour fair value gap. It's an inversion gap. So this SIBI is supporting price, okay? And so you can see liquidity grab, and then we get this big sudden movement up into this relative equal highs. And so that's something I was watching right here. And you can see how it respects 8:30 open. They bring price down below midnight open, below 8:30 open for smart money accumulation. And you can see even on the 1 minute, we're respecting this 1 hour fair value gap right here. The bodies, look at that, almost perfect. And so maybe you can catch a long right here. Maybe you're a fib trader and you're trying to get OTE entry or something like that. So you could take it from that low to that high. There's your OTE. And I guess if you want, your stop could be below here, whatever your risk tolerance is, and you'd be targeting these equal highs up here that we're not taking out, right? right? So first partial for me, if I was going long, would be here, then here, right? And then finally the equal highs right here. And you can see on the 15-minute right here. So zoom that in a little bit. And it gets kind of messy, but that's what I would be looking for. There was really no fair value gap that I could see off the rip right here. Maybe you do have like, let's see. I don't really see. Let me make a volume imbalance right here. Right, there would be a volume imbalance there if you like using those. But other than that, I was sitting on hands until about 2:30. I was at the gym till 2 and I got lunch with a friend. So came back, sat down around 2:30, right before 2:30. And that's really where my interest was in that session, the PM session. Didn't really care about the AM session after this move here. And you can see why, right? Just kind of slow movement. And then finally that 2 o'clock hits. So let's go over that trade in the afternoon. And if I'm moving kind of fast, don't worry. I'll go back and answer questions at the end. Okay, so after creating right before 2 o'clock, right? So look what happens. We have lunch, sell off, okay? Comes out, takes out this low. But remember, not by much. Look at that, only a couple ticks. So sell side has been purged here, right? But it wasn't a deep run, okay? It wasn't a deep run below this low. So I like to see deep runs for liquidity. I mean, this just looks like a grab to me, right? It's just grabbing stops and going higher. And if you want, let me pull this up real quick. If you really look, there's actually SMT with NQ. Let me pull that up, sorry. I got 2 monitors and I got SMT on the right side, but I'll show you guys. So this low right here and this low right here, you can see it's obviously been taken, right? But here and here, right? We failed to take that low on NQ. So NQ was showing strength in the morning and up until FOMC. Dow and ES made lower lows while NQ did not. So that was an SMT divergence, meaning smart money technique. And so what that means is that smart money is actively trading, okay? And when smart money is actively trading, that's when reversals are higher probability to occur, okay? It doesn't mean they're going to occur, but it's a higher probability chance that because smart money is actively trading, that if you're hunting reversals, SMT can confirm that for you. And so, like I said before, we didn't really get a nice run above these highs. So in my mind, these highs are still relatively equal, okay? So let's make that buy side liquidity. And so since we had that SMT right here, before 2 o'clock, in my mind, like I said, we went above this high barely, right? Just a small little shallow run. Same with this low. So these are relatively equal lows. So once we've come up and at 2 o'clock, right at 2 o'clock when the news is released, you see price just shoot up and pierce that high, right? That's inducing all the buyers. That's activating those buy stops up here, right? And so my eye goes, okay, we just took buy side. What's price gonna wanna do? It's gonna wanna hunt sell side liquidity. So now we have sell side down here in the form of this low, these 2 lows down here, equal lows. And you can see if you go on the 1 minute, price takes out that high. And I guess we can do some replay if you want. Price hits that high, and maybe you bought this. You know, I wait till 2:30 or after 2:30 to trade. Obvious displacement, but I wouldn't have taken this long because liquidity has already been grabbed. But maybe you're a gambler and you like to gamble and you want to target that high. That's you do you. I'm going to trade the way I want to trade. So I'm going to wait till after 2:30. And the reason for that being is because Powell's got to speak. The market has to digest this news, and you want to see, obviously, liquidity grab. This is the fake move, right? Because everyone knows we went lower today. So let's keep running. So you see price now displaced down, right, on the 1 minute, right? We're on a 1 minute chart, and look what it does. It doesn't take out this low. And there was no SMT divergence with this move right here, because as you see, price comes back up higher, right? And the failure to take these lows out right here is a pretty telltale sign that, okay, they're leaving these relative equal lows down here. There's no SMT between this low and this low, right? There's no SMT between this low and this low on any of the indices. So what are we looking for? Well, let's get off this. You can see they take buy side one more time, okay? And on the 5 minute, this also isn't even displacement. Look at that. It's literally just a wick, okay? So you gotta be looking at all time frames, right? You wanna see the whole picture. You don't wanna be just zoomed in on this tiny 1 minute chart. So this is a wick on a 5 minute, whereas on a on a 1 minute, it's just a quick move down and up. That's just a quick move down to induce breakout traders, grab stops right here, okay? And it's gonna go and take buy side one last time. So now you have buy side being taken. You have relative equal lows down here that are formed now. And so right when we got up about here, and what time did this occur, this move right here that went down? You see right at 2:30 right here, price goes up, hits a fair value gap or a BPR. I guess you call it a BPR right here if you want to use that. Hits this BPR, hits lower, leaves relative equal lows, and takes buy side, right? So now I'm thinking, okay, we've just left relative equal lows, almost a triple bottom, right? We know smooth lines like to be made jagged. And the first initial move was a liquidity hunt to the upside. It looks like they're just inducing and using this as a phantom trend line or a triple bottom. You know, people were buying this and putting their stops right below here. And so what smart money is doing is just going to take it up one more time for the people who they induce short. They're going to grab, reaccumulate some more short positions up here, right? Right up here. They're accumulating short above these highs. So this could be like the accumulation right here, if you wanted to call it that, right? And it's FOMC day, right? So maybe this was the minute, you could say this is manipulation. And even if they took this low out, right, it probably would have been another shallow run, and it probably would have not displaced lower. And so I would just look at that as another, a support line that retail sees that we would want to target for shorts to offload. So we hit the BPR, go lower, take out the highs up here. And this could be like your accumulation manipulation right here. And this is where the true smart money is adding short, right? Up above these highs, flooding the market when they break this level with buy stops. They're selling into those buy stops short in a premium. And so you had this aggressive entry, which I was just watching right here. So this is obviously a breaker because you have a high, a low, higher high, right? Or you could even say right here, sorry, I'm getting ahead of myself. That's a valid breaker when you break below here. But right here, you have a high, low, higher high, and then you break down below. So once you break that low right here on this candle, that is where you're adding, right? So price comes down, market structure shift. You could even call it right here. I like to use this one. And sorry, I don't have the chat pulled up right now, but I will get to your questions after this. Right, so there's your shift. And so once price shifts below, it comes up, hits this breaker, right? So aggressive entry could be right here, right? Or you could put it at the body of this order block right here, or the body of the breaker, right? They line up. And so here is your order block inside a breaker. So we're adding confluences, and we just took out buy side up here. And so you could be looking to target these equal lows down here. And you would probably want to take partials here, somewhere around here, in this fair value gap in a discount array. And because you also have midnight open, 8:30 open right there. And so price kind of stutters there for a sec, then goes lower. And finally you get that smooth lines made jagged right here. So that was something I was watching. I didn't play that, but I was watching and just tape reading. So once we had this big move, I was originally wanting like a shift here And this is like what I was expecting or was trying to get short on, was something like this, where price comes down, hits this, and then goes lower, right? Hits up into this fair value gap and goes lower. But we didn't get that. So you got to take what the market gives you. And so this was a missed opportunity for me for an aggressive short. But it's FOMC, so I'm just gonna wait. Once the move's already happening, you know, I'm not looking to just chase. I don't want to short in a discount, right? Once we leave 50, right? I don't really want to be shorting down here. So I'll just wait. And we actually got a nice trade over here, and that's what I'm gonna go over next. So thank you, Cryptologic. I don't have any voice acting gigs, but if you know of any, hit me up. So also shout out to the 68 people watching right now. I think this is like the most I've had in a live stream. I think about half I was looking at the stats, about half the people who watch are subscribed. So if you want to interact in the chat, it's on subscribers only mode. I would really appreciate it if you guys would subscribe. I try and do a live stream about once a week. I was sick last week, so I couldn't do one last week. But as the market's starting to heat up, and as we are entering the regular season, I like to call it, rather than preseason, the beginning of this year, I think we're gonna be able to put some cool content out. I got some educational video ideas and some more content ideas in the future. I think I've already said it, but for those of you who have been around to a couple of live streams already, I want to do some community interviews. I want to start a series actually, and this is kind of, I think would be cool, where I take someone who knows nothing about ICT or maybe even trading in general, like my mom or my little brother or somebody, and try and teach them ICT from scratch, right? And it could be a cool little video series, you know, where I sit down with them for like an hour or two a week, and you know, I just teach them from scratch how I learned the basics. So anyways, let's move on to my trade now. I was watching this obvious displacement, right? So on the 5-minute, obvious displacement right here, okay? And you have a 5-minute fair value gap. So you see liquidity grabbed, and a lot of people in my DMs asking, why did you not want to take a long after grabbing sell side now? Well, that's because you want to follow the displacement, right? So what they're going to do is they're going to grab the sell side, right? And you could take a long. There's nothing wrong with taking a long. Just know that you're probably fighting institutional order flow, which you are obviously on the higher time frames, right? Obviously in the 1 hour, you get these big wicks. And on the 15-minute, there's still no fair value gap here. But on the 5-minute, that's what I'm watching most of the day. You have this big move here after grabbing highs. And so if this doesn't tell you where the market wants to go, you need to go back and rewatch the 2020 mentorship. You want to see displacement through, right, a level. And so you get that right here, cuts down. And you leave, and displacement is categorized by these fair value gaps that are left behind. So you have this one right here and this one right here. And so why wouldn't you want to short this one right here? Well, that's because you're still in a discount, right? Let's do premium discount. You're still in a discount, right? If you're shorting right here, you don't want to short in a discount. You want to short in a premium, right? You want to short where the algorithm is going to want to sell. And so this invalidates that fair value gap for me, even though I was watching it as I got in short up here, right? So let's go ahead, and I was paper trading today, just messing around with a $100,000 account. And let's show executions. There we go. So this is the trade I took today. So right here, right, you can see I got in right when price hits that fair value gap. And if you want to narrow in the entry like I did, that's my higher time frame point of objective, right? Higher time frame point of objective. No, can't say it. Higher time frame point of interest. You want to look for low time frame entry / confirmation. Okay, that's what we're doing. So what's the higher time frame point of objective or point of interest? Well, you have this order block right here, right? These two candles are a bearish order block. Okay, inside a fair value gap on the 5-minute. And this is also, if you want to call it, This is also a breaker, okay? Yeah, I know it looks really weird with these wicks. It's I didn't really, I mean, in my head, I knew it was a breaker, right? I didn't bother drawing it out because I kind of already had the idea that that's what it was. But you can use, if you want to use the wicks and cut the wicks as the lowest part, you could use, maybe the bodies if that was comfortable for you. And look, you can see almost to the tick, it hits the top of that breaker. But if you wanted to use this candle too, you could use this candle since it's the thickest body, right? And you can see how the bodies respect it. But let's go on the 1 minute and keep in mind this is a breaker right here. Let's go on the 1 minute and see what got me in. So in this fair value gap right here, inside of premium, let's move this over, above the 50, right? So once I can be a seller above this level, above the 50 right here. Well, what's the first imbalance above that level? Or what's the first liquidity pool? I guess liquidity pool you could say was above highs, but there are orders inside these gaps. So what's the first fair value gap or imbalance you see? Well, we have this order block right here on the 5 minute. Because remember, I'm watching both time frames. And we also have this fair value gap right here. Okay. So let me just remove the executions real quick. So price hits that order block and look at the reaction, right? Almost perfectly closes at the opening price of that 5 minute order block right here. Almost perfectly closes, and it's FOMC. So you gotta give your trades room to breathe, and you gotta give, if you're gonna trade it, and you gotta be okay with a little bit of coloring outside the lines, right? These are just mohawks, as ICT likes to call them. So you can see prices respecting this fair value gap really nicely. All right, we go above, but this right here is what got my attention to go short. And so I went short 10 contracts right here. I just market ordered, right? Market ordered 10 contracts, sell at this price. When price came up and hit that fair value gap again, when I saw it respecting it in a premium, 10 right there. Okay. And you say, why didn't you wait for a market structure shift? Or why? I've been doing this for about a year now, full time. I know what I'm looking for. I'm following the displacement. Okay. And so I had this fair value gap drawn out as well. And so once I saw that, we didn't close, we closed below it right here, I was like, okay, perfect. Since we've already filled this imbalance in, right? Price isn't going to want to go above here. So when I got short right here, my stop was above here. So let's go ahead and mark that out. Got in right here on that when it hit that. Stop one tick above. And right when price comes up, I entered a little bit early. Slippage kind of got me. But I was trying to enter right here on this when price came up and re-entered this fair value gap right here. And you see how it was weaker right here, right? It didn't go higher, right? And so this is also a valid order block right here. Let's see. There we go. Or you could just color the whole candle, right? Whatever you want to do. But mean threshold, and it's kind of getting messy again. Let me take these off. Mean threshold of that order block, right? It almost ticks it right there. And if you want to use the body, look at that. The wicks stay below the mean threshold of this candle right here. Let's make that red so you can see it. So this reaction right here was perfect, right? That's what you want to see. You want to see these premium arrays repel price. So we're inside this order block right here, respecting mean threshold of the body, or even the wick. You could say we didn't even touch the wick if you're using the wick. Just kind of depends on what the personality of the candle, which one I like to use. So when we close below here, that was even more confirmation. All right, discount arrays aren't respecting price. Premium arrays are repelling price. Sorry, price isn't respecting discount arrays. And you can see we bounced off this order block, right? And 8:30 open. So I was a little cautious, but I added more right here. And when we had this move right here, I knew I was on side because there's your shift. There's your IOFED entry for short, 2022 model right there. You have your market structure shift, right? Shift, IOFED entry. And then you can go down and target this imbalance right here. And finally, the lows down here. And you got to keep in mind, remember, I'm not just watching the 5 minute, the 1 minute. When you go over to the hourly chart, let's see, sorry, 15 minute. Let me just clear this stuff off real quick. You guys know where we are. This move right here, right? When I went short up here, what did this leave right here? And also, if you go on the daily, sorry, I forgot to mention, there's a daily fair value gap right here. And so that's what these FEGD1 and this dotted line down here is. I'll just put FEG daily, so you know what those are. But what's on the 15-minute? When price came down, right? Came down here off the top of this fair value gap on the daily and gave us a short entry. What did it leave? Well, you can see on the 5-minute, obviously. Equal lows right here. There's equal lows right here. This low and this low, right? So what does that look like? It looks like support, just like they did with these lows right here, okay? Just like right here when they engineer liquidity, they're doing it again. So I'm gonna take advantage of that. Smart money sees that as orders. They're gonna let orders and induce people long right here, and they're gonna let the orders pile up, and that's what you're gonna want to target, and that's what I targeted on this trade. So let's bring the executions back up. 10, added 5 right here. Kind of got fucked with slippage there, but I mean, I guess you could count it as adding off the order block if you want, or midnight open. So once we're below here, you can kind of see how it acts as resistance. And you have all these arrays on your side now, where your stop is getting more and more, you know, I guess you call it protected. But you have this fair value gap here. You have this 5-minute order block here. You have this 1-minute order block here. Now we're below midnight open price as well. That's another barrier. So you're adding in all these confluences that price is going to now want to go lower. Okay, so we're not respecting a discount array anymore. And so you can see it kind of honestly almost uses it as resistance a little bit. I know it's coloring outside the lines, but here's your IFED entry. And even here, I took off 10 right here, 10 of the 15 right here, right? So right when we hit this discount array, I'm taking partials, guys. I'm not trying to sit here and hold for the whole move. I know I would have been safe in hindsight, but partials pay you. There's nothing wrong with it. And honestly, I'm taking partials in most of my trades. It kind of depends on how I'm sized. But you know, better safe than sorry, right? You always want to pay yourself. And so now you can see actually price closes below this fair value gap, right? So I trimmed here. I trimmed some more here on the 5-minute. If you go, this could have been a potential rejection block, right? So I drew this out in time. Let's just make it dotted. So this line right here, I took some off. You know, I kind of missed the opportunity to sell some on this candle, so I just took off some right here. All right, and you can see price actually hits that rejection block, comes up. This is on the 1-minute. Comes up, respects this inverted fair value gap, right? Price comes up, doesn't breach it, and by this time I had taken 10 off, and once I took 3 more off right here, I had 2 left. So what I did was I moved my stop above this high. Okay, let's just make this red. So this is where my stop is. So now my stop's in profit. And once I took the first 10 off, my, let's see. I was basically in about right like here. The stop was here. So targeting here is about a 2R with 10. So boom, take off 10 there at the 2R. And right when I take my first partial, my stop goes to break even. And where did I put it? Well, I put it above this high right here. Actually, I can just move this. So why that high? Well, it's break even, right? It's above 830, okay? And it's a few points below where I entered to cover commissions if I get stopped out. Well, obviously I already funded the position, right? So if any slippage did come up and get me out, I want to get out for break even, not lose money. So above this high, and why this high? Well, there's a fair value gap here from the IOFED entry, okay? So price is gonna have to fight through that fair value gap to get to my stop, right? You don't want to jam it, right? You don't want to trail it down here. And so once I did take this, once I took this last partial right here, my stop went from above this candle, right? I took off 1 more when we broke this low right here. So what's that called? That's called running down equity. It's a term ICT uses. So when we took this low out, I was like, I'm gonna take one more off and then hold the last remaining for this relative equal lows on the 15 minute right here. Okay. So that's what I did. Took one off and my stop went, sorry. When I took one off, or sorry, 3 off here, my stop went once. So I took 10 off, stop went to here. Took 3 off right here after at the rejection block, stop now rolls to here. And you might say, well, why that high, right? Well, right here is a balanced price range, okay? Let's make it blue, okay? So now my stop is 1 tick above the balanced price range, and you can see it's permissible for price to come up and want to hit 50% of that, right? But you don't want to see it violate it. So that's why my stop is one above, okay? And you might say, well, how's that a balanced price range? There's a difference between a balanced price range. Let's see if I can find a good example. Like right here. There's a difference between this being a BPR, right? 1 pass, 2 pass, and then the 3rd pass comes down to balance and rebound and balances it. There's a difference between that BPR, right, and this already being a balanced price range, because this isn't balanced yet until it comes down. Let's use this example again. I talked about this in the live streams. This is a BPR once price hits it, fills it, and then moves away, right? Moves away up or down, either one. It's now balanced. This is already balanced because it's already had 3 passes, right? You go 1 and off this wick. Let me take the executions off. You have 1 pass that comes down. There's 1. Up is 2, and then it leaves it 3. That's a balanced price range. It's already balanced. So what's it going to do? It's going to act as a premium array, right? Make sure I got there we go. So it's permissible for price to want to come up into that balanced price range. It's already balanced and hit the 50, okay? This is different from an implied fair value gap that ICT talks about, where the wicks overlap and not the bodies over 2 different candles, right? This is a balanced price range. So price isn't it's gonna have to fight through that to get higher towards my stop. So when I saw right here, price start to drop, I said, I'm taking 1 off right below here. I'm gonna run down some equity, 1 off, and then I held the final for below sell side here. So when you saw my post on Twitter, I had BPR CE. Let's just do. There we go. Right. So the consequent encroachment of that BPR, that's what it was indicating, right? The balance price, the 50% of this range right here. So my stop's above the swing high. And so once I ran down the equity, place the stop above the order block here or above this swing high, and now the stop moved here. And by then, it was pretty obvious to me that, wrong thing, that we were just going to go down and take out these lows. So, and that's what ended up happening. And for targeting purposes, if you want to see something cool, shout out AM Trades for these projections. Look, I even have them named AM projections. The manipulative move that takes liquidity, right? Look where price stops before and retraces back into a premium for shorts. Right here, the -2 and the -2.5 standard deviations from this manipulative move higher. Right? Doesn't get almost more perfect than that. Make it dotted, make it black. So boom, price hits it, retraces for shorts. And even in here, like if you wanted to take a long, you might, you probably could have if you wanted to wait for price to maybe break this order block or something like super aggressive. But I'm not interested in longs, right? I want to follow the displacement. I want to get on side with where the market's, the algo. Sorry, take a sip of water. I want to get on side with the algorithm, and that's the whole point, at least from my style of trading. That's what I'm trying to accomplish. So, and you can see we come down and look where the -4 projection, the final projection lines up almost perfectly with the daily fair value gap low, right? You can see right there, boom, hits it, and you can see the reaction off that low right there. So just to remind you, the daily fair value gap is this high and this low, right? I know it's hard to see. I like to have my charts pretty clean, so I use colors that kind of blend in, but I know what each level is. I mark them out in the morning. So there was that trade. And then we basically gravitate up into close down into the new week opening gap, which we haven't hit yet. From, I guess that's all the way back from, March 17th. So that week, that's where the move stopped. So, but you don't need the whole move to be profitable, right? Am I mad that I didn't hold runners down here? No, I'm not, because I see the power that just taking partials can do. Look at this. This is all from today, right? Started with 100,000, 15,000, right? And I probably over leveraged a little bit, right? But my goal for this paper account is to run this balance. I'm trying to double it, right? I want to double it by, who knows, maybe end of the month. So I'm being really aggressive with this account. So there's little challenges I like to do here and there. So when I'm not trading live funds, I was kind of waiting for this week to be over, I am trading with paper. All right, I just pulled the chat back up. Sorry, I had it closed. I don't want to be distracted. But let me go through these questions real quick. About to start wrapping. Event horizons were insanely respected today between the new, So I have, when you talk about gaps, right? I know we just started a new contract, so like all the price action back in like February is kind of boo-boo. You can see. So once the volume kind of got in the new contract, I just kind of decided, you know what? I'm just gonna play off and start writing the gaps where the price action just gets clean. So I have the gaps for those weeks, but not the previous ones. But yeah, I have a tab for new week opening gaps. I have a tab for previous days high and lows, right? And so this is all core content stuff that you can go back and look at and watch the videos. But obviously it's really helpful to see, previous day high and low, mark out the days, midnight, and you can see where price takes out the high, it's lower, right? And hunts that low of the day. And this is just in the S&T chart. But let's keep going over some questions. Standard deviation. So this is like an example of standard deviation, right? So it's just this move from, where's my tool? Here to this high, right? 19 handles. It's just that move down, projected down. See? -1. -2. Right? Those are just standard deviations. And then obviously what's half of 19? -1.5, or sorry, -0.5 deviation. So that's what a standard deviation is. This is how you use the projections, right? You want to take the manipulative move that grabs liquidity, and that's what you want to use to project your targets. And so you can see price finally hits the fourth standard deviation, and the move's pretty much over by then, right? It's just sideways. But today was super clean on the 1 minute after 2:30, right? Unless you got chopped up in here. This is why I wait for 2:30, right? Because you have this kind of stuff that will get you wicked out, get you frustrated. You want to follow the displacement. And look, it's not even giving entries, your standard entries, right here, right? It's not giving you a pullback into these fair value gaps to go higher. It's literally just going down, up, right? And all that's doing is just wagging everybody in retail out. And it's going to do the same to you if you're not patient and you wait for a scenario that makes sense. Everyone online is trying to catch a move. All you need is one move to be profitable, right? There was literally, how many 5-handle moves could you have found in this right here, right? You could have gotten in short right here. You could have gotten in on this IFAD here and got 5 handles. You could have gotten in, this is a little aggressive on my part, but you could have gotten in back right here when you saw price respect this premium fair value gap and order block. Like, there's so many, just to take out this low. If you got in right here to take out this low, that's 10 handles, right? That's the beauty of FOMC days, if you know what you're doing, is how volatile it is. This, in 3 minutes, right? Let's just say you get on this candle, 1, 1, 2, 3, 4. In 4 minutes, you just grab 10 handles, right? Or 11 handles just by entering off this fair value gap, stop above this high or this fair value gap, however aggressive you want to be. And, you know, there's your 11 handles for the day. Okay. It's all up to you how you want to trade. But that's standard deviations. My templates are clean. Yeah, I basically only have 4. This is I'll show you my SMT chart. This is SMT. This is literally on my other monitor. It's literally just a 5-minute chart of Dow, NASDAQ, ES, and the dollar index on the side that I just kind of alter through the daily, this is all I have on the dollar, right? Displacement, premium, short, down into sell side. And now we're kind of hitting this order block here. So who knows? Maybe this is where dollar slingshots up after being an OTE. High time frame point of interest, this order block. I'll be watching that tomorrow. But yeah, I'll just leave that on there for tomorrow. And look at the reaction off that. So this is what I have on my other monitor. These are my templates, and I already showed them to you. You know, I have opening gaps. I have daily high and low. Save that. And then I have just an SMT side-by-side chart that I can quickly switch through on NQ and ES. Even though I do look at the Dow, I don't trade the Dow. I barely trade a NASDAQ either, but I do watch the NASDAQ and Dow together. So when I'm making my decisions. Let's keep going through these questions here. You could have joined the halfway point fair value gap in the 5-minute. Yeah, if you want to enter on the 5-minute and watching you could have entered constant encroachment. You could have entered right when it hits the fair value gap here. Sorry, didn't have it drawn out right. Let's get all this stuff off. Yeah, if you want to enter like off the order block, like no one's stopping you, right? I like to see a little bit of confirmation and a little reaction on a lower time frame, right? Remember those words I had written? Higher time frame point of interest, lower time frame entry / confirmation. Okay, this is what I like to see. Maybe you just want to enter on maybe your 5-minute is my 1-minute chart, right? I'm usually entering off the 1-minute or 5-minute, depending on the day. It was an awesome short on the 5-minute, right? Just a 1-minute. I know what I'm looking for in a smaller time frame to maybe confirm that. So that's why I use the 1-minute. But yeah, whatever suits you, right? There's no really wrong way to trade. You catch the moves how you want. And so right there, boom, hits the 50% of that fair value gap or consequent encroachment, what we call it. And then boom, that's your entry. Your stop could have been above the fair value gap high if you wanted. Or maybe above consequent mean threshold of this body of the order block up here, or this last up close candle. Up to you. Maybe you want to put it above the breaker high over here, a little bit tighter, or maybe you want to use the wick of the breaker. It's all up to you, right? It's all up to you. But the 1-minute, I like it because you can narrow in your entries with your stops, right? So there's a 5-minute fair value gap right here, but inside that 5-minute fair value gap, there's a 1-minute fair value gap. So that's what I mean by higher time frame point of interest. 5-minute order block and fair value gap, narrow in on a 1-minute or lower time frame. Make a Discord, bro. I have a Discord. It's just me in it though. I'll show it to you. It's literally just me. It's loading, hold on. It's literally just me in there, and all I do is post recaps for myself. Oh shit, wrong thing. Did not mean to click on that. Where is it? Yeah, like today. And this is what I write out, right? Whether it's a real trade or a live trade, I'm posting recaps, and it's literally just hundreds of trades. So, but yeah, I mean, there's really nothing else in there. Like I have a couple like entry model, like a couple like little concept things I like to go through every once in a while. Like here's what I'm talking about. Market structure, point of interest, higher time frame raid, lower time frame confirmation. That's literally what I was trying to communicate here. Okay. So, but yeah, this is just my personal Discord. It's just me in there, obviously. Yeah. And I like to do like little like breakdowns as well. I think I showed this off yet. Last time I streamed. But I recommend everyone start something like that they can go through, and it's just them in there. You can go through, recap for the day, maybe write some notes down for yourself, like on the daily bias, like some of these, I'll just post like what I want to see. This is all the way back from December. Yeah, I haven't really been posting in here. I really only post in the recaps channel now. So thanks. Yeah, I got a decent mic. Missed the whole move today, frozen by fear of face ripping and account blowout. Yeah, there's no point in trading if you're gonna be emotional in the day. I've just been through so many of these FOMCs now. And I do this every day that, I'm used to it. But if FOMC still scares you, like it did me when I first started trading these concepts, especially when I was trading retail, I always was trying to catch a move, right? And everyone was like, "Oh, the first move's the fake move." I was like, "Well, how do you know which one's the real first move? Like, this could have been the fake move up. This could have been where you want to. All right, now the fake move was up. Now we're gonna short. Oh, we're gonna short, and then now you're getting dragged across the coals up here. It's okay, that was the. Now we're gonna go long. That was the real fake move, and then they get dragged across the coals again. So it's like, yeah." I just remember like all these little sayings like first move's a fake move. Wall Street only trades the close. Retail trades the open. Like just all these stupid sayings that literally don't mean anything. Thanks for dropping a sub. That dude trades. So I'm just going line by line on here. Reading through these. Thanks, Ricky. Crypto, I got to your question. Yeah, balance that fair value gap. How do you turn auto off without clicking on it? Auto. I'm not sure what you mean, Doc, by turn auto off. Anywhere I can find more videos. I literally only have a couple, like, I don't have any educational like videos that I've like edited like professionally or anything like that. Most of my educational stuff is just on Twitter and these live streams I do, like probably like once a week. But I will try and get to like some educational videos in the future. I think a lot of the stuff that, like the basic stuff, like T-Trades covers a lot of stuff. He's really concise with his videos. I kind of want to cover some more like advanced stuff. Maybe like that balanced price range concept, right? Where you have the down, up, down, and like using that along with like, because I haven't really seen any people make videos on that. Maybe there are some. I'm not usually getting my info from third-party sources though, and I'm probably like speaking against my own channel, but I do believe like everything you need to know is on ICT's channel, right? That's how I learned. And then you should use third-party teachers like myself, if you want to call me a teacher, T-Trades, any other educational third-party person. Use them as like refresher videos, and maybe ICT goes into a concept but doesn't really explain it right, or not explain it right, but explain it in terms or a link that you like. So obviously you go watch and listen to it from the man himself, but then maybe pair it with like a T-Trades video or a video from mine in the future when I come out with them, or someone else that you appeal to. And like that's another thing. People who charge for knowledge, right, or people who have paid rooms, I have nothing against that, right? Because those people, maybe the way ICT teaches doesn't resonate with you. Like I'm a big believer in like if you don't vibe with like the teacher, you don't. I think Jade was posting about this on Jade Cap Trading, who was in ICT's most recent interview. I think he was posting like the same. I had the same mindset as him. Like I have nothing against paid rooms. A lot of people just can't get behind ICT and like the way he teaches, and that's fine. And they want someone else to teach them. So I have a passion for teaching, or at least helping people. So that's kind of the whole reason I started my Twitter page and this YouTube channel. So, and like he's like the way Jade was, I think he put it was like really hit the nail on the head. Like as traders, like what we do, like on the day-to-day basis is pretty like pretty mundane. Like we just sit in a room all day by ourselves, and we don't really like have anyone, you know, like a way to give back. Like, yeah, I can give money to my family, or, you know, I'm not gonna give my friends, but anyways, won't talk about that. But like, yeah, I can like give that way, but like, how else can you give back to someone without it being monetary, right? And so like a teaching is like another way to do that. And so people might be saying, well, like, this is my opinion on it. Might be saying, well, you make money from trading, but why do you need to make money from a room? It's like, you don't see the hours and the days that anyone else devotes to these concepts and learning these concepts, right? If you want direct access to someone who can prove it up with a proven track record, and that's another thing, like if you're opening up a room or you're selling a course or service, you need to be transparent and show you're consistent. And it's a shame that that's not like required. There's no way to enforce that. But I'm a big believer in, if you're going to charge people for something, you need to be able to show proof that you're the real deal. So that's just my opinion on it. But like, I have no problem with people charging money. If they're taking time out of the day to help you, one-on-one, or you get direct access to them. Like, my DMs are closed on Discord. I got so many DMs. I had to make it friends only. So if you want direct access to someone and they've put in the literally years away from their friends and family, like my day to day, literally all last year, was wake up at 7, stretch, make a little something to eat, sit down at 8 o'clock, trade from 8:30 to 12, eat lunch, go to the gym, come back, sit back, maybe shower real quick if I have time, depending on, you know, the day, or if I've made a trade or not. Shower, trade the last couple hours, review my journal, my trades, make dinner. And by then, like, I'm almost wiped, but instead of watching Netflix or something, I would open up an ICT video and I'd rewatch ICT and I'd take notes, right? So that's literally been my life for the past year. And I'll maybe one day I'll do a Twitter space or something on like my journey, but like, you don't see all that online. All you see are the profits and the trades on Twitter. So for someone to want to charge for the time and the effort they've put in to learn these concepts and to take the time out of their day to teach you, like, I don't see a problem. I don't see how that's not fair, right? So I think that's pretty fair. Let's see. Do you think a rejection block usually makes it equal high or low to be run later? Like for me, like when you have like this, like like a series of candles like this, right? Where it's a bunch of wicks, right? And obviously the draw was lower. But like for me, I would be taking partials here on this rejection block. 5 minutes, probably a better example. Yeah, like right here. Like I was taking partials when price hit that. And if you go back on the 1 minute, that's what I tried to do on this candle right here. If you pull up my executions right here, right? And so yeah, I didn't get it perfectly right, but it's the general idea of taking the profits there. That's like, in my eyes, a rejection block. And so you want to take, you know, I'm taking profits at the fair value gap. I'm taking profits at discount arrays, because you don't know if price is going to want to take this low out. There's going to be some SMT. You never know. Like, you saw how close it got to this low right here, literally a handle or two away. And then it, you know, launched higher for premium ads for short. So you never know. You want to take partials. I hope that answers your question. This rejection block, you should make it equal high or low to be run later. It doesn't have to be equal, right? Like, these aren't equal lows. They're just wicks, big, you know, longer wicks. When you see multiple of those, that's a good sign that it's probably like a rejection block and you want to take profit there. But like you can see in these highs, like there's not huge wicks there. And I know, like, I was zoomed out, but like here, even here, like there's not huge wicks there. And you know, price is fractal. So, but like in my eyes, yeah, I'm taking, because there's sell side below these bodies. Remember, the bulk of the volume are in these bodies of the candles. That's what tells the story, is the bodies, right? And you see the wicks do the damage, but the bodies tell the story. So that's what you want to focus on. You can see bodies never even closed inside that 5 minute fair value gap. The wicks do the damage, but the bodies tell the story. And so there is sell side below here. So I'm taking partials there, taking partials, you know, below these relative equal lows. And my thought process is, well, you could have taken one here as well, but if it's that close to that low, it's probably going to reach down and take out, you know, a handle lower this low. So, let's see. Can you run through a checklist of what you look for every morning? Yeah, sure. So when I sit down at the desk at 8:30, let's just delete everything off my chart. How about that? So when I sit down, this is what I sit down to. It's literally this. Sit down at my desk. This is what I pull up. Okay. First thing I'm going to do, I'm going to go to the daily. Okay. I'm going to mark out anything that I see. So this day obviously hasn't happened yet this morning. Let's not even talk about today's price action. Let's just mark out stuff. So you have this fair value gap here. You have this fair value gap here. But I'm not usually, you know, this is what I'm seeing with my eyes. And then what I'll do is I'll just use rays to mark these out. FEG daily. And D1 just stands for 1 day or daily chart. So I'm on the daily, you know, I'm trying to, you know, pick it, you know, see where price may want to go to next. It's FOMC. So, you know, today I'm not really doing too much analysis in the morning, but I am marking out these levels. And I did have, you know, like fair value, like it's even funny. You can see like how price respects this fair value gap on the daily right here as well. Comes up, doesn't even close above it, right? This big down day, bodies, fractal nature. And then I'll go to the 4 hour, right? So here are my levels for and I'll kind of refine there we go. So here's my like levels for the daily fair value gaps. And then you can see how price respects them. So that's what I'm doing basically. And I see, okay, well, price, I guess this morning was about right here. So I'm on the 4 hour and I'm marking out, okay, there's probably, I think that's an order block, right? And then I go down on the 1 hour and I had buy side marked above here as well. That's weird. Buy side, and then I go on the 1 hour and you can see that 4 hour order block is still true. Series of down close candles supporting price. So this is literally what I saw and I was like, okay, well, IOF or institutional order flow, market structure is bullish, right? Displacement, retracement into this order block. So it's probably going to take out these equal highs. So that's what I was thinking in the morning, but I wasn't really trading it. So that's literally what I do is I just go down from the daily. I'll peek at the weekly here and there, but it's mostly daily, 4 hour, then 1 hour, then 15 minute, right? And I'm just marking out, you know, I'm saying, okay, it's pricing a premium when it bounced and went higher. Yeah, so like it hit the 50 right here and had a reaction there off that order block. And so maybe you want to, you know, maybe mark out a 15-minute fair value gap, or now you go on the 5 minute, right? But usually when I'm marking stuff out for the day, I'm on the 1 hour, 4 hour daily, 15 minute, and I'm kind of swatching between the 5 and the 15. So I hope that helps. But yeah, I'll look at that and I look at the economic calendar. I'm assuming everyone has like a similar site, but I use Forex Factory. So that's basically what I'm doing. Basically what I'm doing in the mornings, just going down and marking out, you know, higher time frame point of interest, higher time frame PD arrays that are below and above my market price, or the price that is currently at. But like I said, I'm also looking at the boxes, right, or the ranges for each session. You had highs of Asia being swept and the lows being swept. So search and destroy, you kind of have this broadening formation here. So when I saw that and I sat down the desk about this time right here, this candle, that's about when I knew day before, you know, morning of FOMC, taking the highs, broadening formation. We're probably going to want to reach up and take out these equal highs up here, because this was just a small little run or grab. And look, they don't make it easy on you either. Look, they don't make it easy on you. You might be trying to buy this order block. Nah, they're gonna take that low one more time. And look, they don't even give you an entry for a breaker. They just send it right up there above these highs. They don't even give you an entry. So unless you're buying turtle soups, which I'm not that good at, I know what I'm good at and what I'm not good at. I'm still working on the turtle soups, but I've kind of gotten in a little better at seeing them. But yeah, look, they don't even give you a breaker entry. It just shoots straight up there after chopping you around for literally almost an hour, just sideways chop. So if you're on the 1 minute trying to force something, you're gonna get destroyed. So that's why you don't want to watch price on your entry time frame. You want to watch on the higher time frames because it's going to keep you from taking dumb trades in this price action right here. That's basically what I do every morning. Yeah, ES1. I just want to, maybe I'll go back and do that and look at and see if the gaps are off. I like having like the perfect like tick, like to the tick gap, because the way I trade like super precise. I'm assuming everyone does, but I'm getting through your questions, guys. Sorry, I like to go in depth and give you your bang for your buck. What was the fair value gap at 240 on the 5 minute? Not at 240 on the 5 minute, not a long. 240. Oh, so this candle right here. Why was this not a long? Think about what we just did. It's FOMC. We took out these relative equal highs, or buy side. If you get back on the 4 hour. Where's this big red level from? Oh, wrong thing. Buy side, right here. Inside a daily fair value gap. You even go as far as to say BPR. Okay. So why was that not a long on the 5 minute? Well, we took out the buy side, right? Shoot. Took out buy side. Delete these levels. And what you want to see, I guess you could call this displacement, but for me, bias was bearish because we took out buy side here, came down, created equal lows, remember, right here off this move. So there's going to be sell side below there. People are going to see that as support. Bounce once, bounce once, bounce twice, bounce 3 times. That's that's a triple bottom. So that's a clear line, clean line that we want to make jagged. So that's what price does there. And why you're not longing here? Well, it's not even in a discount. You're in a premium still when you long right there. See? From this low to this high, that's in a premium. You don't want to long in a premium. You want to short in a premium. So if you wanted to be a buyer, right? You would have to be a buyer below the 50%. But look what we've done. We've taken out buy side once, twice, actually once, twice, 3 times, right? And so that's suspect. And then when you start combining it with S&T, which there were none right there, but if you're looking at like the lows, there's no SMT below here, right? There are clean triple bottoms across the map on indices, on NQ, on the Dow. So you don't want to long in a premium. That's why that fair value gap didn't work out. And you also, if you're going to be trading on the 5 minute, pull that back up. You also want to have other charts pulled up. So when price, let's see here. Even on the 15 minute, look what happens. We come up, hit that, and then price comes down, right? There's no higher time frame. Yeah, there's a 5 minute fair value gap there, but there's no higher time frame fair value gap. On the 15 minute, I don't see one. There's a tiny one there. On the 1 hour, there's nothing. Like, look at that. Clear grab of liquidity. And we've already taken buy side 3 times. So I guess you could maybe call that a 3 drives, but I don't really trade that pattern too much, but it's just something I look for. Let's see. Hope that answers your question. You don't want to be longing in a premium. Where does your stop go? Not sure what you mean. If you're talking about my trade, I went over that already. How can you tell when a dealing range will retrace more than just the current one and go for a bigger dealing range. So like, it just depends on like what kind of trader you are. And when you're talking about dealing range, are you talking about, like obviously if you're trading on the 1 hour, like this is a dealing range right here. Like we came down in the, here's a dealing range in the 1 hour, back down into, equilibrium basically. But like for this move right here, like here's another dealing range, right? From here to here, here's a dealing range. Because look, we took out buy side and we took out sell side. So now this is your new dealing range. Well, these lows above these highs. So this is your new dealing range right here. Here to here. So once we come up to a premium of that dealing range, are there any imbalances? Yes. Any order blocks? Yes. So you start lining up. Is this a breaker? Yes. So you start lining up. I'll just use the bodies. Even though you're supposed to use the wicks, but you start lining up all these things, and that's basically what I look for. But how can you tell if it's going to retrace more than just the current one and go for a bigger dealing range? I'm not really sure what you mean. Maybe try and reword it. I can try and get to it. General ICT question, working my way through 2022. Is that the suggested year to start with and other materials? All right. So if people are asking about, I've had people in my DMs ask about, and we're kind of getting like, I'm getting towards the end of the questions, which is good. I don't want to get this stream too long. It's about 1:15. People are in my DMs asking what order should I watch ICT? There's so much content. I can tell you how I learned it, right? I can tell you how I learned it. So one, I watched 2022 mentorship because the 2023 was not out yet. And what did I do? Shoot. I write down three most important things each episode. Okay. That's what I did. So I kind of created a little mini table of contents. It's solidified in writing, right? Because when you write something down, you're easy to remember. I wrote down 3 things from each episode that I thought were most important. So I could go back and refer back to it if, oh, okay, I need to review this concept or what he talked about here. I need to rewatch that. I knew an episode exactly to go back to. And maybe if you even want to get cool, fancier, you could put a timestamp. So he talked about it here at minute 14. So I did that. And then I watched the month 1 through 4 core content, which I think is really important because it solidifies. Because once you get to month 4 is all about like how to use an order, like what is an order block, what is a breaker block, what is a rejection block. All those things are in month 4, and month 1 is like getting your mindset right. Like how does the algorithm book price? How does the algorithm book price? Is it in expansion? Is it in consolidation? And there's a certain pattern that price moves. I talk about it in the last 2 live streams, so I'll do it again. There's a certain, like you'll know what this you'll know what this means if you watch month 1, right? This is covered in month 1, right? And I still use it to this day, every day. It's prices are doing one of 4 things. It's either consolidating, like it is down here. They're consolidating. It is expanding, right? Like it's doing right here. Shoot, there we go. It's expanding. Price can't go from consolidation to reversal, right? It's got to go. It's from consolidation. It has to expand. So you could argue, right? It's all about how you internalize price. You could argue that literally up until, make it black. Up until FOMC, price was literally just consolidating, and that's not what you want to be in. It's literally just, expanding, right? It's range expansion. You could argue that it's literally just consolidating. And so, what you want to be trading, unless you like to trade in consolidation, which I don't. I like to catch these moves, right? You want to be trading in expansion, right? When price is expanding, or maybe hopping in on a retracement, right? Or maybe getting in on a reversal, like right here, where price comes up and there was no, that 1 minute entry was off that breaker block, could have been your reversal entry, right? So once price takes out this high, there's your reversal entry right there. Boom, price hits it. So it reverses. This is just a retracement on a higher time frame. Okay. Yeah, you can long that if you want, but I'm getting in sync with the institution order flow. I'm not trying to trade against the trend. That's lower probability. Okay. You want to trade when probability is on your side. So this is literally just a retracement, especially on a higher time frame when you look at it. So consolidation, you have, I guess you even call it accumulation, manipulation, right? And then you have your distribution right here. So that's your power of 3. There's your distribution, accumulation, manipulation, distribution. And what does that look like on a daily candle? Well, looks like this. Open, go up, make the high of the day, distribution down, close near the low of the day, right? That's today's price action. That's literally what if you go out on the 15 minute, that's what you got. You have midnight open. Let's draw the price out. Here is midnight open. Price comes up, it's accumulating, right? So you have accumulation. Accumulation. Then you have the manipulation where price runs up, fucks everybody over. And then you have the distribution, right? Distributing down. So they're accumulating. Let the orders pile up. You're going to take it up above, buy side. They're adding short up here. So I guess you could just do that if you wanted. Accumulation, manipulation, distribution down, right? They're selling into these people who want to be breakout traders. Oh my God, it's breaking out. Look, we're going to all-time highs. Boom, their dreams are crushed now. They get dragged underwater. So that is how I would watch, right? And that you will learn this. You will learn this in month 1, and that's why I say you should watch month 1 through 4 to learn, the specifics about each, like an order block, a breaker block, but also to learn this, because this can tell you just as much as This I think is more useful than an order block, right? Once you know this, once you know where price is going to go, getting in is the easiest part. And I feel like people don't realize that. Like, there's so many different ways to get in a trade. The hardest part is knowing when to get in, when to stay out, and what price is doing. You don't want to trade in consolidation. You want to trade in these expansion moves, okay? Or you want to get in on a retracement. You don't want to get in on you don't want to get in on consolidation, because that's when you get stop hunted, right? That's when you're going to get hunted. And you can see they do a pretty good job of it right here. Stop hunt above here. Stop hunt above here. Look, hunted, hunted, hunted. Then the true move unfolds, okay? You don't want to be just like sitting here with an order, and that's what most people do. They're trying to guess where the market's going to go. You just need to look at what price is doing. What state is it in? Is it consolidation? Great. I'm going to wait till the manipulation. Once you get that manipulation, right, above this high, above the consolidation, that's where you want to be getting in. You want to be getting in up here above midnight open, right? Because midnight open is this price right here. You're going to be getting above midnight open because you want to catch the high of the day, or somewhere around there. Remember, I got in up here, right? Around midnight open. Okay? And then I'm going to ride the expansion down. Okay? I wish it would have been cool if I got all the way down there. But I don't trade the daily expansion, right? I'm just looking for my quick moves, right? So maybe I get half of this. That's fine. That's all you need. You don't need anything else. Just do that every day. 1% on your account a day. Be 1% better a day. And you will be profitable, right? The hardest part for new people, they think it's the entry is the hardest part. The entry is the easiest part. It's really the exits, right? And that's why ICT, he struggles with the exits the most, because he knows where the market's going to go. He knows how to get in. He's got a million different ways to get in. But if you can't get out at the right time or know when to engage in the market, that's what's going to kill you. You could study every single concept and still not be profitable because you can't be disciplined and stay out when price is consolidating, and you don't know when to get in when price is now expanding, right? And when I was newer, I found myself trying to get in here, and then I would either be 0 for 2 that day, and when I lose 2 in a row, I'm done. I walk away from the charts. I'll be 0 for 2 for trying to force stuff in here, and by the time a nice clean move would occur, I would already be sitting on my hands because I lost all I could trade for that day, right? And that's not what you want to do. You want to get in where the move is literally so clean that it jumps off the chart at you. That it jumps off the chart. If a setup doesn't jump off the chart at me, I'm probably trying to force it. Okay? If it's not super obvious with with displacement to the downside after clearing out a high, and I'm starting to see all these confluence points on the higher time frames, narrow entry in the 1 minute. If that's not occurring, and I can't just look at a chart and say, wow, that's a retracement after, consolidation, manipulation, displacement, follow the displacement. If I can't quickly just look at a chart and see that, then I'm probably trying to force a trade, right? And that's when you're going to lose the most, when the probabilities are not in your favor. But yeah, I would watch. So going back, sorry, I get off track. 2022 mentorship. Write down 3 things that you deem are most important for that episode, so you can go back and you can watch those episodes and have a little table of contents. Number 2, month 1 through 4 of core content. Okay, that will tell you this. The specifics of a breaker block, the specifics of, when an order block, a rejection block, all those. And it'll also teach you some really cool other things like high resistance liquidity runs, low resistance liquidity runs. It's a tongue twister. Things like that. You sound very thorough, breath of fresh air. I don't get that from a lot of ICT traders. Yeah, the thing is, everyone thinks they can make, and I'm not like hating on anybody. There's nothing wrong with a quick little educational video. But like ICT is absolutely correct. You can't teach this stuff in a 5-minute video, right? And so it's literally a language. It's an algorithmic language. And, we're trying to think like a computer algorithm here, okay? So it's not going to be super simple. Even though the concepts are simple, right? There's so many little nuances, and those are the things that intimidated me when I first started. But once you do it for so long and you submit the time to it, to just learning it and submitting, just watching the candles paint, like you don't even get excited anymore when you enter these trades, which is what you want, right? That doesn't mean I don't get excited not to trade, okay? There's a difference. When the weekend comes, I'm pissed because I'm sitting here having to wait for Monday, okay? But there's a difference between getting excited and emotional on a winning trade or a losing trade versus enjoying just sitting here and watching the setups form and getting in and getting out at the right time and watching the, how you get in at the top. And there's nothing better than sitting there and watching making money in like 5 minutes that would take me a week's worth of time to make at my old restaurant job. Okay. So yeah, maybe I do sound like a breath of fresh air because, everyone likes to make ICT super condensed. I'm just going to tell you how it is, right? Yeah, you can watch these little trainers videos, but in the end, you should be coupling those videos with your own study, ICT's original videos, and your back testing and things like that. Yeah, 2022 mentorship, write down 3 things, core content 1 through 4, then watch 2022 mentorship again and take notes. And then the last thing I did was just go through the core content that interested me. Like I'm eventually going to watch it all. I haven't watched every single video yet, but I would, sorry, I lost my train of thought. I was reading these comments. Yeah, core content, 2022 mentorship, and rewatch the entire thing. Because in my opinion, the 2022 is better than these 2023 live streams he's doing. If you've watched it all and you know what you're doing, it is fun to watch, follow along with ICT. But I swear every time he streams, it's like in a high resistance setting. It's like not even that fun to watch. But those are also the ones where you learn a lot, because he's teaching you when not to trade, which he says no one else teaches, right? Everyone teaches you, oh, you can make money every single day, right? Well, those people also probably aren't as consistent as they would like to be, because they are trading every single day. Yeah, TTH does have some concise short videos. When did I start? Sorry, I'm trying to get these questions. I'm almost done through. I've been trading for like 4 years, but I started ICT probably beginning of summer last year. I remember I came home. I don't want to talk too much about myself, because I'm gonna do a Twitter space on like my journey. I think one day, maybe even like a video. If we get to 10,000 followers on Twitter, I might do a face reveal. But I started 2022, beginning of summerish, like probably like June, I want to say. I don't know. I could the day I opened my futures account was like pretty much the day I started trading it full time. I can go back and look at that. But yeah, started then, and then just basically dropped everything once I learned what a fair value gap was. I was like, okay, there's something here, and I wanted to dig deeper, and I dug deeper and deeper, and eventually ended up watching the whole mentorship, and started trading with live funds too early. I made like 25% on my account the first month I was trading live, and then lost it all. Paper cut, paper cut, paper cut, paper cut, because I got cocky. I thought I knew exactly what I was doing. And I think what had happened was I was just on a hot streak with beginner's luck is what it was. And like a lot of people want to miss stuff like that. But I made like 23% on the first month, or like 23, 25%. And I was like, damn, this shit's easy. And it got humbling really quick. And so I took a step back after that, and I realized like what I was doing wrong. Or no, I was like, all right, what I'm doing isn't working. So what do I need to do to fix that? And journaling like obviously helped me a lot with that, like correcting those mistakes. And then I went back to like paper trading for a while until I could basically find the setups again consistently, right? Because once I knew something was off from losing basically 23% or all those gains, and I was back to break even, that's when I was like, all right, this isn't working. Like I'm basically in a downward spiral right now. I need to stop. But I don't want to get into too much of me, but we'll talk about that in another video. Is that a mitigation block? I'm not sure. Sorry, we passed that. While learning, did you backtest at the same time, or did you try and grasp the concept and backtest? Yeah, like when I first learned, he would say something in a video, and after the video, I would go straight to my chart and be like, where can I find this? But the thing is about backtesting, you don't want to just backtest random. Like a lot of people don't know how to backtest. You don't want to just backtest a random like spot on a chart. Okay, you can, but if you're going to be a New York trader, you got to decide what session you want to trade. So if I'm going to trade a New York session, I'm not going to be looking at price action in Asia where it's just sideways. I want to be looking at price action around 8:30, maybe like 6 o'clock to 8:30. Obviously you want to look at this, but you don't want to be like looking for setups and back testing where you'd be getting in and getting out at 2 in the morning if you're never going to be awake at 2 in the morning Eastern time. Okay. I'm on the East Coast, so I trade New York open and close, or New York AM and PM session. So that's where I do my back testing. Okay. That's how I recommend back testing. You want to back test in the environment and in the price action where you're actually going to trade. But now I don't do too much back testing. I just forward test now, meaning I just watch price live. But like going over price action like this with you guys on streams is pretty much back testing, reviewing. And the nice thing about this is when you teach it, you learn it twice. So it's just reinforcing my memory as well as I go through it with you guys. But yeah, I would watch the videos, back test. I was also trying to do this full time while learning ICT, because I traded like EMAs and things like that, retail concepts before finding ICT. So I'd already been trading. I knew obviously how to read a chart, and I've been doing it for a couple of years now. So but yeah, I did back test in the beginning. I don't really back test as much anymore, but maybe if I get the urge, I might hop on a chart and like test some stuff out. Daily, 4 hour, 1 hour is the best time frame for PD arrays, for real, for real. Let's see, turtle soups are not for, yeah. Let's see. Yeah, and you also want to look at the dollar. I haven't talked about that in this stream. Maybe we'll do a dollar. I'll do it. That'll be another educational videos, like how to use the dollar as your North Star when looking at for price action. I know there's a clip of ICT saying, why didn't you long that fair value gap? Well, how do you know this fair value gap isn't high probability? He's like, I just told you. And basically what he was saying was when the dollar is not respecting, it's a PD array where you think ES is probably going to respect one. Like, let's say you think that you're going to sink lower right here, like off this, like for some reason you wanted to short right here. Let's say you're trying to short here and you thought this was displacement. Well, you would look, and as price comes up into this point right here, you would look at the dollar, right? Let's just pull up dollar, and then we have ES here. We may do a video on this one day. You look at the dollar, right? God, this thing's difficult. But you would look at the dollar and you would say, okay, is the dollar respecting if ES is going to go lower here, that means the dollar needs to go higher. Actually, this is a really bad example today because look, this is FOMC for you. Look, both are going higher. See? This high to this high. Or this low to this high. This low to this high. So like, this is just an example of search, seek, and destroy. Probably shouldn't use this as an example. But you would basically want to see this PD array start being respected or similar PD array being respected on the dollar as you would and going higher, and you would want to see this be respected and go lower, right? Inverse. Both you and Joe reiterated 2022 and core. Yeah, 2022 I think is the way, it's just the way I learned. And I think he teaches like the simplest model in there. Whereas 2022, he's teaching you all these little knickknacks. There's nothing wrong with that. It's the new shiny thing, like the inverted fair value gap, the implied fair value gap, new week opening gap. Like those, you can literally build models just off that. But I think the way the videos are like set out between like an hour to like 30 minutes long, and there's only 40 or something of them, like I think you should watch those first because he's going to bring you from knowing nothing. Whereas these live streams, he's basically just kind of like on the fly teaching. But these the 2022 videos are all already laid out. So if I go back and tell myself what I know, yeah, it's a good series for sure. Especially like the first couple episodes of like trying to like keep to yourself. There's really no point in sharing what you're trying to do with your friends and family. Let's see. Which trading of ICTs do I have to watch to really learn order blocks? I just can't seem to understand how to identify them. I've been trying really hard. I would just go watch the order block video. So you can I'll find it for you here. Go watch the order block video. It's under month 4. Should we watch the video now? I'm pretty sure it's, yeah, this one. I'll just put it in the chat. There you go. Go watch order block. Is your profile pic from Attack on Titans? No, it's actually from something else. It's not anime though. I don't really watch anime. Never really got into it. Thank you for the kind words. Premonitions. I think I said that right. Yeah, like I said, so that order block video, you would come across it when you'd watch month 1 through 4 after watching the 2022 mentorship, okay? So that's why I say, like, there's a reason I say watch month 1 through 4, because you will come across that video. it's like in those first 4 months are like super basic stuff too, and they are only going to reinforce the concepts that you learn in the 2022 mentorship. So that's why I say 2022 mentorship, month 1 through 4 core content. Rewatch 2022 mentorship, taking, you know, maybe a little bit more detailed notes than the first time. Then you can follow along with his 2023 mentorships, and also pick out core content that interests you. I've pretty much watched almost every single video. I still need to watch like the interest rate stuff and the swing trading videos. I don't really swing trade. I do swing trade options, but usually when there's only like a market maker buy or sell model. So with like a really clean chart. Like I've been shorting IBM for like a month or two now. Right? Look at that. Buy side, clean lows, come up, hit the buy side. If you go on the daily, right, this is what you see. And I got in short like right here. I probably got in a little bit early, but like once we took out that high right there, that's probably where I probably should have got short in. But I got short like, I think like right here on this day, right after the earnings miss. Or I guess they had good earnings, but you see how that goes. Who cares? They're gonna, smart money's gonna take that lower, and I got an alert set to offload the rest down here, somewhere around here. But I took profits here at this volume imbalance. You see how price reacts, comes down, hits it, goes lower. Took another third off here at the gap right here. See how price kind of goes lower, comes back up, and now today after FOMC hit this huge down 2% day right here. So maybe I'll take off the next position like below these lows, or I might just write it down to this area you got down here. I don't know. You don't need the whole move to be profitable, right? I'm already up 170% on those puts for April 20th. So I got about till this day right here, this line to get down here. So I'm kind of just seeing what price wants to do to stop at break even. But this is really the only swing trading I do is with options. Yeah, man, no problem. Thanks for stopping by, guys. If no one else has any more questions, I think we got about 52 viewers here. I don't want to make this go too longer. It's been about an hour 40 per usual, even though I said I'd try and do an hour, but it's pretty hard when I talk. I'll get off on a tangent sometimes. But if no one else has any questions, I will let you guys go. Feel free to subscribe and set alerts when we do these again. I will tweet out the link every time, or I'll try to, and also post in the community tab on YouTube, right? Where's my YouTube? But go to my channel and subscribe. I'm trying to hit 1,000. Right? We're close. Only have like 4 videos, but we're going to change that coming soon. So feel free to subscribe. Hit me up on Twitter. Let me know you like the stream, and I will talk to you guys later. You guys be safe and have a good rest of your trading week. I will be on Twitter alongside you guys. Peace, guys.